Hi, I'm Adam Chapnick. Welcome to this special edition of Security Token Insight, brought to you by the Security Token Academy. As you know, the Security Token Academy continues to be on the leading edge of the security token industry. We've held world-class events and conferences featuring the top industry experts from around the world. We traveled to New York City for another world-class meetup with industry experts. We've also interviewed the top CEOs from around the world, including those in Paris, London, and more. If you missed out on any of our events and/or any of these interviews, sit back and relax and enjoy these highlights from 2019.
There's two kind of trends that have emerged from the groups that we've spoken to around the world that are interested in security tokens. One trend is from institutional investors that are looking for more complex products that they can't buy and access through traditional markets. In other words, they're looking for a new investment product, and with, let's say, IRR of like 20%. So it's high, it's a high yield product. So whereas on the other hand, there's another client segment that's emerged, and their trend there is an investment mandate that is focused more on what I like to coin the vanilla security tokens, maybe real estate backed or precious metals backed or even oil backed, right? If people want to buy and access oil, trade oil, it's quite difficult for them to do that. So I think these kind of products appeal more to family offices and high net worth individuals. And you know, they have a different investment thesis. These guys are in the game of wealth preservation. Yeah. And the fund managers, of course, institutional guys are here to make some good returns.
We're looking at real assets that we can tokenize. That would make a lot of sense. It would take advantage of the tokenization process. I believe that there are a lot of cash flows and yield curves that could be liberated using the token format so more people can have access to it. We can talk about things which are not boring, things that I do all the time, which is real estate and so forth. And we can talk about things that are interesting, which we talked about yesterday. We're looking at whiskey, potentially doing something with whiskey in terms of tokenization and so forth. I've spoken to people about brand new whiskey, the aging process. The interesting way of talking about it is we would hold barrels, and the boring way to say it is we're basically providing balance sheet to distillers for them to make their business more efficient.
One industry that we're starting to see get tokenized is actually the non-traded REIT space. Now, this is traditionally a very illiquid marketplace that you have maybe a dozen or so private equity funds that, trade these assets amongst themselves, and they need at least $100 million in order to participate. Yeah. When you're introducing tokenization and security tokens, you can actually bring down the barriers to entry. So you can bring down the cost of capital, allow for much smaller bite sizes, and this allows a much larger investor base to actually participate.
If we believe that data is one of the most valuable assets on the planet, could we introduce a security token that leveraged our existing platform to allow people to fundamentally tokenize themselves? You can tokenize a venture fund, you can tokenize a building. Why not the digital representation of you? Every time you engage with any device, someone is making money, just not you.
As we come back to these compliance-aware tokens, the centerpiece of this is the ability to map global securities regulations into the behavior of the tokens. Yes. Global securities regulations are complex. Each jurisdiction has their own particular rules, so that you can map these in to the tokens. They can change, and the tokens can adapt to the new rule sets important. We're working with the regulators from two governments to actually show that we can issue private securities with the jurisdictional rules of each of those governments and trade them between the citizens of those two countries. This is showing cross-border trading, decentralized cross-border trading of restricted securities.
Wow.
That is a really big deal, because in the end, it's possible to layer in all the world's frameworks into these same tokens and allow cross-border trading. Currently, only the very biggest financial institutions are capable of these types of trades because they're so complex.
Yes. Are you guys seeing a need for more regulations in the security token world? I mean, you have a unique perch from which to view this. What do you think? Steve?
More regulation, I think, is not the issue. The issue is more understanding of how to apply these assets within the existing regulatory framework. I don't think this asset class will lead us to having, we have the Securities Act of 1933, the Securities Exchange Act of 1934, Investment Company Act and Investment Advisors Act of 1940. I don't think we'll necessarily need the Digital Asset Security Token Act of 2019. But the existing framework, and this is happening, and the markets have led the regulators to this point, will need to accommodate these assets and will need to be flexible enough to fit these assets within the existing framework, or in certain areas, Jesse mentioned custody as one, there will likely be additional regulation. And additional regulation is not harmful. If it's smart regulation, it actually allows for a level of certainty and to build a durable business based upon certainty in the law and in regulation. And that's truly what industry participants want. They want to know what the rules are. They want to work within those rules, and they want to do what they do best, which is build a business.
Right. Jesse, what do you think about regulations? Lots more needed?
I would definitely echo Steve's points for sure. And I would note, and we feel that regulators have been quite proactive and have been very engaged in trying to understand these new technologies. I mean, I think the SEC, but certain other federal regulators and state regulators have been very engaged in trying to understand the impact of these technologies on the markets that they regulate. And the SEC regularly has engaged in consultations with the industry. Like Steve mentioned earlier, they're asking about custody of digital assets right now and trying to learn more information so they can understand better how to apply the existing framework to these new assets.
One of the things that everybody's going to remember is that offshore offerings were like the hot thing, especially once the SEC started cracking on things. The thought was, let's just sell our securities offshore and then we're going to be free. The question was always, there was legislation in the Dodd-Frank Act that actually addressed the fact that the SEC had very, very broad rights to actually go after anyone making a securities offering offshore. The Dodd-Frank Act essentially addressed that, but it was done at the same time as a Supreme Court offering, literally a month apart. Wording in the legislation was very strange. It was never clear whether they actually meant to address it and limit the SEC's jurisdiction or not. And essentially what we ended up seeing is about a couple years ago, there was a case where a district court essentially decided that, sure, the legislation didn't directly address it, but the legislator meant to address it. And now we've had an appeals court just a couple days ago, or a couple weeks ago, that have addressed it as well, and that basically said, yes, the Supreme Court was actually trying to go ahead and give the SEC some expansion of the SEC's jurisdiction.
We get a lot of inquiries from offshore issuers who are looking to tap into the U.S. market. From them, the questions are, do we need to incorporate inside of the U.S.? Should we form a subsidiary there? Which securities exemptions are available to us? Thankfully, Reg A Plus is available both to Canadians and to U.S. organizations, whereas regulation crowdfunding is not. And of course, Reg D, 506B or 506C is available to everyone who wants to capital raise inside the United States.
We invented a concept called KYA. KYA is know your asset.
Know your asset.
The same way that KYC, know your client, is the identity of a person, KYA is know your asset is the identity of the asset. And with KYA, you have all the documents relating to all the legal documents relating to the asset, explaining what the asset is, what the rights of the token holders here. All of this is being packaged and added to the token, incorporated into the token, so it goes with the token on the blockchain. It's immutable. Nobody can change it. Nobody can play with it.
Right.
And as a token buyer, you can look at it and see exactly, what you're buying.
I think one thing that's really interesting about security tokens is we're taking existing financial infrastructure and financial instruments and rebuilding them up on the blockchain. And one of the primary pieces of enabling that is compliance and making sure that you're following all the rules and regulations that you're supposed to as an issuer of a security. And so we do that by speaking with our clients' in-house compliance teams. Perhaps we'll have to speak with their law firm, their professional services firms. We have clients that work with Deloitte, PwC. We capture all of those regulatory requirements, whether they're banking regulations, securities regulations, or tax regulations. We package that into our platform, and then it's automated from there out to a certain extent.
Incredible. Okay, so you guys recently coined a new term. I think it's new. KYB, why don't you give us the big reveal of what is KYB, why is it important, and why did you guys sort of roll that out?
Yeah, so I think most people are familiar with KYC.
Right.
And so why do we have to do KYC? There's a regulator out there called FinCEN that's enforcing a regulation called the Bank Secrecy Act, which requires banks to collect certain piece of information when they're onboarding individuals as clients. So when you go sign up for an account at Chase, they're going to ask for your driver's license, maybe a utility bill, just so they can ensure that they know who you are and that you've got your money through legitimate means, like by working at Security Token Academy.
Right. And so that's KYC, know your customer.
Yeah. And that's very individual based. And so recently, FinCEN amended the Bank Secrecy Act with something called the FinCEN, the final CDD rule. And so what that says is that if you're taking money from a financial institution, you also have to perform similar diligence on that institution. So you do have to make sure that it's a real entity that is valid, that is up and running properly, and you have to further ensure that you know who the beneficial owners of that entity are. And so you have to KYC the beneficial owners of that entity. Mm-hmm. It's very complex. It's very manual. Yeah. It takes a long time to do. When we went out and did a survey and looked at what services are out there, because initially we didn't want to build it, we found that on average it takes 10 days to process an entity through due diligence procedures and to do that verification.
We're talking about compliance now. We're not just, you can't just say you're doing something that's compliant and it's compliant because you said it was. You actually have to do filings and do things right and make sure that everything is verified and done correctly. So there are going to be more than 100, but when we talk about real ones actually trading, maybe 100.
Yeah, no, I think it makes sense. Like 100 that are going to be compliant with U.S. securities laws, which doesn't mean that all the other ones aren't going to be compliant. I mean, we have to remember just the one thing that STOs are like ICOs is that it's completely global. And there will be issuances outside of the US by non-US companies. And those are going to be just as legitimate as the US ones, potentially. There's also going to be a lot of them that don't recognize that US laws are more complex than laws in other jurisdictions at times, or more strict, and they're not going to comply with them. And if we add those in there, the ones that take it easy, or the infrastructure providers that say, hey, this is how you tokenize it by coming and creating this asset on our decentralized STO platform, we're going to have hundreds and hundreds and hundreds of them. But we're probably going to be close to 100 that are actually regulated.
There are so many reasons to have a custodian, right? But there are also a lot of challenges surrounding, does your custodian have the technology that matches well with what you're doing, right? So there are plenty of custodians out there who hold all types of assets, custodians that hold art and gold and money, but do they have the infrastructure necessary to connect to a blockchain? So if you want to custody something that's digital, now you're talking about looking for a tech company. So at Prime Trust, we call ourselves a tech-driven trust company because we really very much focus on the technology that allows us to hold cryptocurrency.
I mean, the whole space is developing, and when we think of security tokens, there's a value chain. The issue of the person that issues the security token needs to work with a primary issuance platform or a tokenizer. Mm-hmm. You need good quality primary issuance platforms in place. And then if they're going to go on and create a liquid secondary venue after that, you need a good secondary market in place. And then after that, you've got all post-trade events. So you think of those like settlement and custody, and you need all parts of that value chain to be appropriately developed.
Yeah, locked down. They have to be
exactly, and they need to be non-porous, in credible jurisdictions with credible counterparties. So we're trying to address the secondary market piece out of London.
Given that you are sort of up-leveling the whole sort of menu of what's possible for issuers and investors, how far ahead of everybody are you? I mean, there's two possibilities, right? You're developing and seeing around the bend and nobody sees it yet, or are you bringing it all down to where everybody can use it? Which do you think?
Well, so that is another important addition. We have open sourced the compliance aware framework.
Oh, wow.
So the intention on this is really to allow anyone to take advantage of these advanced technologies in the space.
Interesting.
And our strategy along those lines is sort of the same as Red Hat did with Linux.
Yeah.
They took that operating system and they made it work for the enterprise. We do that with our interoperability layer against this open source framework. So we think we're far ahead of the market.
Yes.
Maybe too much to some degree.
Well, that's the question, right?
As oftentimes folks are sort of overwhelmed with the possibilities.
Right.
But we're really laying the framework for the future of finance.
The thing that we're working on with the issuers on the platform today, and certainly issuers moving forward, is what level of information can you provide so that potential investors in a secondary market can do the work and the research on your offering to make sure it's something they want to participate in. So historically, there really hasn't been much disclosure from issuers of private securities, and that's part of the reason a lot of them have stayed private and elected not to go public. But we think that by holding issuers kind of accountable for some disclosure, that will breed more interest and more demand on the buy side. So we're having those conversations today, and reception's been really, really good from both current and prospective issuers.
So, as you know, in the US, you don't have to have a transfer agent to deal with certain type of securities. So far we were operating without being a transfer agent, and it was not a problem from a regulatory perspective. But we always felt that being regulated gives confidence to people that what we're doing is legit. We felt like by having an SEC regulated license is going to allow us to do two things. One is going to allow us to basically deal with all the type of securities that you have to have a license to deal with, like Reg A+, public securities, being able to conduct corporate actions like paying dividends and things like that, that some people are doing in the blockchain industry, but is it completely illegal? But anyway, we wanted to do it on the legal way. Yeah. And the second thing is, even for the people that we actually don't need to have a license, to give them the comfort that we're so confident that what we do is compliant that we don't have a problem with reporting to the SEC about what we do with the securities, because it's going to give them comfort that what we do is legal. So,
what do you think are some of the biggest challenges that face clients who are looking to launch a security token? What do you think about that?
What they're faced with right now is a regulatory framework that, again, is not designed to accommodate a digital asset, in the sense that secondary markets have not yet developed to adequately, say, transfer or create liquidity once you've offered the token. I think we've moved to a good spot in terms of being able to engage in a compliant offering, primary offering of a securities token. You can fit into that framework relatively easy. There are some limitations perhaps on marketing depending on what exemption or what route you take in terms of the offering registration requirements. But thereafter, it's liquidity with respect to that security that creates issues, because the process of transfer, the process of custody in terms of exchanging those assets has not fully developed yet.
Interestingly, the questions that I receive from prospective clients and my current clients are very much in line in the security token context as they are in traditional capital raising scenarios. So for example, they call and they want to know which exemption should we be working with here, and they tell me a bit about their objectives. Sometimes they have investors in mind, sometimes they're hoping to bring retail investors into the deal, sometimes they're looking to generally solicit. So we go through the analysis of what their plans are or intended plans are and how the different securities exemptions would impact their overall strategy. What's really exciting to me is that since the Jobs Act, these issuers can utilize both regulation crowdfunding and Reg D simultaneously, which is great given that the total maximum offering limit in a Reg CF offering is just over $1 million.
What do you think is the prognosis for the security token space? Do you think it's... Well, what do you think?
So I believe that it's going to take until about 2022, 2023. Those are my projections, and that's why I put myself on the boogie board, and all of us are right now, because the wave's coming soon. We just have to be patient.
Yes.
So I'm using that analogy, and all of us are on the boogie boards right now.
Yes.
And you set up a couple of different boogie boards, and you wait for the wave to come. And the wave's coming, and the security tokens are a big part of that wave.
You said that Vertala started in early 2018. We're now midway through 2019. So over the past year and a half, what is your opinion about where the security token industry is today, where it's going?
Well, I think that the future is extremely bright.
Okay.
In the last couple of days, we saw YouNow and Blockstack both get Reg A Plus approvals.
Yes, that's huge.
That's really huge, because what you're seeing is SEC and FINRA saying, yes, digital assets are a thing, and they're a thing that we can approve. So what you've seen recently is Andreessen Horowitz changing its entire firm to registered investment advisors.
Right.
The reason, and making investments in companies like Harbor, making investments in companies like Carta. Remember, Andreessen Horowitz is the biggest crypto VC. These guys realize that there's something big. There's a mega trend happening across acquisitions, rehypothecations of venture funds, et cetera, where people are going to get ready for this. It's the amount of money that the big banks have spent, that NASDAQ and NYSE through ICE have invested in this, all of these investments, all of these things point to a massive trend. And that massive trend is this: the era of paper-based certificates, which are owned by proxy, is coming to an end.
Well, it looks like we have a lot to look forward to in 2020 as the industry continues to thrive. Be sure to stay with Security Token Academy as we bring you the most comprehensive security token coverage from around the world. Have you listened to our Security Token Stories podcast? Derek Schloss sits down with Stephen McKeon in this end-of-the-year interview to wrap up the year with a look back at the security token industry in 2019 and the areas they're most excited about in 2020. Here are his thoughts on his investing thesis at Collaborative Fund and what his team thinks about when making investments in blockchain infrastructure. Stephen McKeon is a partner at Collaborative Fund, a venture fund investing in blockchain-based infrastructure, decentralized finance, and the building blocks for tokenized markets. He's also a finance professor at the University of Oregon and one of the leading thinkers in the security token space. To listen to the latest podcast and many more, go to our website, securitytokenacademy.com, click the Interviews tab, and select Podcast. All right, that's it for this special episode of Security Token Insight. Be sure to follow us on Twitter, Facebook, Telegram, and Medium. And don't forget to subscribe to our YouTube page so you don't miss out on any of our videos or expert interviews. I'm Adam Chapnick. Oh, and before we go, a big thank you to our Gold corporate members. And for everyone here at Security Token Academy, thanks so much for watching. Learn about regulations governing cryptocurrencies and security tokens from around the world with our regulatory review. It's on our website, securitytokenacademy.com. Click on the Education tab and select Regulatory Timeline so you can stay connected.